Hey, what's up, stock compounders? Brad here. So, obviously, we just had a huge weekend, it being the Berkshire Hathaway annual meeting, but we got a little bonus on top of that. Mohnish Pabrai and Stig from the Investors Podcast did a little interview Q&A session. So, as always, I want to pull out my highlights from this session. There's really three things that I want to dig into from this Q&A. One, the Circle the Wagons framework, which is something Pabrai has talked about in previous sessions, but I hadn't fully grasped what he meant by circle the wagons, and I think I do now. So we're going to go into that. We're going to talk about investing in Japan, the two reasons Pabrai is pretty hesitant on Japan for investment opportunities. And then he talked a little bit about Alibaba. So we'll end with that. So what is circle the wagons, right? What is that framework for investors? Pabrai says the circle the wagons concept comes from the 19th century on the American frontier. As the pioneers were moving west, these wagons used to get attacked by the American Indians. Okay, the defensive posture that those pioneers took was to put the crown jewels in the center of the circle, and then you fight, right? So you're defending your most valuable assets. So what does this have to do with investing? Now, Pabrai didn't state it explicitly, but I was thinking about this. What does that mean to circle the wagons in your investment portfolio? He talks about Buffett having 12 great decisions that really made Berkshire what it is today, gave those shareholders the performance that they got. Without those 12 great decisions, Berkshire would be very average. So I want to share a quote from Buffett. "Time is the enemy of the poor business and the friend of the great business." Okay, so that relates to this circle the wagons concept. It's not enough to find a great business at a reasonable or fair price. Okay, you've actually got to insert patience into that equation. You've got to let those great businesses do their thing, compound in your portfolio. So what I realized, circling the wagons, what are we defending those great positions from? It's actually ourselves, right? And I talked a lot about this in a recent series on the psychology of human misjudgment, the ways that we can, make poor decisions, right? Mislead ourselves. Pabrai talks about signal versus noise, right? If we're paying so much attention to what happens quarter to quarter, we can lose the forest for the trees and act on something that's really just a natural fluctuation in the business. It's not an indication that there's some kind of secular decline happening and that should be exited. Pabrai talks about Walmart and how the only people who held Walmart from the IPO until today was the Walton family, right? Because they treated it like they were owners. They were owners, right? And all investors are owners if they take that perspective, but most investors don't take that perspective. They see it as a piece of paper to be traded when the next flashy thing comes along, or when Walmart is down a quarter, right? So it's understanding that signal versus noise. Greenblatt pointed to this as well. Joel Greenblatt, he wrote a book called The Big Secret. He jokes it's still a big secret because nobody's read it. But the big secret is patience, right? And Buffett talked about this at the Berkshire annual meeting about how people are so impatient in the markets today. There's so few long-term value investors. And a situation like that, Buffett said, it's really made to order for people who are trying to evaluate businesses on a 5, 10, 20-year basis. So that's, I think, what Pabrai means by circling the wagons, right? Protecting those positions from ourselves, right? From poor decision making that can happen so easily. Terry Smith would say, do nothing, right? Find a great business, do nothing. Well, that makes it sound, it's a little overly simplistic, because there's always going to be noise, right? There's always going to be temptations to do something that's not in our best interest. So part of doing nothing is understanding where we're vulnerable in our thinking, in our psychology, to making poor decisions, and work each day on being better around those, seeing the reality of that and not falling prey to misjudgments. So he also gives a few examples of investors that have circled the wagons or just held great positions over a long enough time that those particular positions made them rich effectively. He talks about Walmart, which we covered, Rakesh in India, who passed away recently. 4% of his portfolio was in Titan Industries, and that made him a billionaire, right? Even if everything else went to zero, that 4% initial position made him a billionaire. Nick Sleep with Amazon. If you take Amazon out of the equation for Nomad Investment Partnership, maybe a little bit above average because it had Berkshire, it had Costco, but nowhere near the performance that it actually turned out to have. Circled the wagons on Amazon. Naspers buying Tencent back in the early 2000s. That was an initial 6% bet, and they barely cut it over the last 2 decades, and it's really made Naspers what it is today. So that's the circle the wagons concept. We need that long runway combined with those great decisions, and we need to let that runway, play out. So, and Pabrai ends this by saying, this framework of circle the wagons is very fundamental. It's very hard to beat the market if you don't have this framework. Okay? If you're trying to dance in and out of stocks as they reach intrinsic value, it's very difficult. He also says it's okay if you water the weeds as long as you don't cut the flowers. Okay, and that's why the index does very well. It's very hard to beat the index because the index doesn't cut the flowers, right? The index doesn't sell Amazon, doesn't sell Microsoft because it thinks they're overvalued, overpriced. It lets them ride. So let those winners ride. The next thing I want to talk about, Japanese investing in Japan. Pabrai says most Japanese managements and boards run the business for the benefit of the employees. Okay, they do not run the business for the benefit of the shareholders. The number one concern is to make sure the business can survive downturns without layoffs. The shareholders pay a big price for a business that takes that approach. Okay. So that's one of the reasons Pabrai finds it difficult to invest in Japan. The other reason is the demographics of the declining population. That's a big headwind. He says last year, 1.6 million Japanese citizens died. 800,000 new ones were born. Okay, so twice as many died as were born. And we're seeing that in many countries around the world. The replacement rate of people just isn't there. We're not at replacement level. We're actually declining. And that's something Jeremy Grantham has talked about quite a bit. The last thing, let's touch on Alibaba. In the case of Alibaba, we saw actions by the Chinese government that quite frankly became very hard to handicap in the future. Hard to predict. We've seen a bunch of actions in the past, which we didn't see when the investment was made, back when Pabrai initially bought into Alibaba. Those actions destroyed value for the investor. We certainly saw that with the stock price action, but Pabrai is pointing to something deeper. We don't know what the end game is with that situation, with the CCP, and businesses in China. what the Chinese government does and the impact it has on Alibaba goes into the too hard pile. All right. We just don't know. Pabrai also adds, I've tried to avoid mega caps. If you're buying a business in the hundreds of millions in terms of market value, hundreds of billions, sorry, what's the runway, right? How likely is it if you have a 300 billion, 400 billion company that you're going to get a 10x, right? That it's going to become the biggest company in the world, right? Currently, I think Apple is around 2.5 trillion market cap. So if you're counting on the business you own, if it has to become the largest company in the world for you to get a 10x, there's some real headwinds there, right? It's probably a difficult pond to be fishing in, which is why Pabrai prefers much smaller companies. He's mentioned in the past he really wants less than 500 million in market cap. We've seen him buy Brookfield, which deviated from that recently. But certainly Raisis and TAV airports, both in Turkey, kind of fit that small cap framework that Pabrai is the pond that he's really looking to fish in. So anyway, guys, that's all I wanted to share. Just those kind of 3 high-level insights from Mohnish Pabrai in this latest talk with the Investors Podcast. So as always, thank you to Mohnish, thank you to Stig for all the great content, and I will see you all in the next one. Take care.